All right. Matt, the mortgage guy here. I just want to make a quick video to talk about the future of interest rates. Where are interest rates headed in 2022? Sure, I've made plenty of iterations of this, but I just think that it's important for people to know there are certain levers that are pulled, and you can not necessarily have a crystal ball that tells you for sure what's going on with rates, but you have a good idea if you know what levers affect interest rates and which ones are being pulled. So I literally just watched a session where Jerome Powell, who got renominated as the Fed chair, is talking about the plans for the purchase of mortgage-backed securities in the future. And, I don't want to get into the nitty gritty and make this too technical of a video, but what I do want to tell you is that, looking at it from a really simple view, really simple perspective, there's certain levers that can affect interest rates, right? And what I'm seeing right now, this latest Omicron COVID variant, if everything else being equal, if that news came out, mortgage rates would get much better, meaning interest rates would go down, because any fear, any uncertainty with economic markets, mortgage rates get better. That's how it works. What I'm seeing right now, even though we had a great day on Friday and a decent day yesterday, is mortgage rates are not getting better because Jerome Powell is saying, we're going to taper our purchase of mortgage-backed securities, which helps, that the purchase of mortgage-backed securities helps rates go lower. So by tapering, slowing that down, rates are going to slowly creep up. That is, I guess, a stronger lever than this fear and uncertainty that we're seeing. And it's like a battle, right? If the taper was happening and there was no Omicron, rates would be going up. If there was no taper and Omicron was happening, rates would go down. Right now they're fighting each other, and it's a pretty even battle, right? But as those Omicron fears subside and other things in the economy seem to dissipate, without a doubt, Jerome Powell said it today, in their December meeting, which is coming up in a couple of weeks, they are going to talk about tapering faster. And they cite, economic recovery. The economy seems to be doing well in their eyes, and the increased inflation concerns. They're finally admitting to inflation. You've been paying more for bacon. You've been paying more for gas. You've been paying more for everything. And finally, the powers that be are saying, you know what? Maybe we got some inflation. So in order to fight that inflation, they taper those mortgage-backed security purchases and bond purchases faster, and they get out of that, I won't call it market manipulation, but their purchases, they get out of those faster, and rates go up at a higher clip, right? So if you had any doubt about what mortgage rates will do in 2022, this is me as a mortgage broker who's listening, talking to, in the weeds, day in and day out. I'm telling you, without a doubt, mortgage rates will go up. Will it be in line with Redfin's estimate of 3.6%? Mortgage Bankers Association, Fannie Mae, Freddie Mac, almost across the board, they're 3.5 to 3.75. Some think that they might even creep up to the 4% level. Whatever the case, I think it's pretty unanimous that rates are going up. Now, as a consumer, what does that mean for you? If you're looking to refinance and you've got investment properties and you want to access capital to deploy and invest, waiting is not going to help. If you're in the market to purchase, I'll go over that in another video, what home prices might do and home price appreciation in 2022, but know that the money you're borrowing is going to be more expensive. If you're borrowing $500,000 and rates go up 0.5%, that's an extra couple $100 per month on your payment because rates have gone up. So something to keep in mind, something to consider. As with most all my mortgage advice, it's going to be scenario specific to the specific person, right? It's like not the perfect time to buy for every single person out there. It's not the perfect time to invest or start buying investment properties for every person out there. You have a unique situation that you know better than most, and the best strategy is to talk to a professional that can listen to your scenario, throw ideas at you, and have a conversation back and forth. More often than not, you might not know the right answer at the beginning of the call. I might not know the right answer at the beginning of the call, but through conversation, your goals, your current situation, your income, your debts, all that stuff, right? It's going to become clear what is the best course of action for you going forward. So if you want to connect with me and my team, we are more than happy to help. Go to greatmortgagebroker.com, fill out that quick form. We'll be in touch very shortly. No matter where you're at in the country, we're going to be able to either help you personally or move you in the right direction, connect you with a professional who's licensed in your state. Thanks for watching. I appreciate you. And until next time, we go and see.